Hello ladies and gentlemen, welcome to the next video on my YouTube channel, and today we're starting a new series called Buy This Stock Episode 1. In this series I'm going to be informing you guys stocks. We're going to be doing deep analysis on stocks that I think you guys should buy. It's going to be awesome, and you're going to get rich, and we're all going to get rich, and you're going to buy these stocks, and everyone's happy. Yay. All I ask in return for this amazing advice is that you guys like the video, subscribe to the channel, comment on the video, give me some constructive criticism, and just be honest with me because I need to improve, right? Just one more thing I want to add is that I am not a financial advisor. This is not financial advice, so don't sue me. There's a chance the stock goes down, although very little. Don't take this as a 100% fact that you will make money. That's it for the beginning, and you know what's next. Cue the intro.
Hurry up.
Now, anyone watching this who already somewhat follows the stock market is probably in the back of their computer screen about to say,
how is there any stocks that we can buy right now? We are in the midst of a recession. Everything is going down.
Well, I'm going to explain that there is two perspectives that you can have in the middle of a recession where stocks are going down left and right and everything's down 20% and everything's down 30%. And as you can see on screen, that is exactly what is happening right now. But this is a fire sale. If you think like the rich people think, and you got to realize everyone always says the rich get richer during recessions. Well, it's because they buy things at a cheaper price. There's assets like the one I'm about to explain in this video that are universally good assets. During a recession, during a depression, whatever it is, they are good assets, and buying them during a recession is simply a fire sale. It is a good discounted price to buy this asset at. Now, the stock that we're going to be talking about today is Meta Platforms, formerly known as Facebook. And it is a stock that you guys all use today. And before I want to get into the analysis of why I want you guys to buy this, I will explain simply how Meta makes money. So they sell your attention to advertising companies, right? So Nike wants to sell a shoe and they want to get it known that this shoe is out there. Well, what they do is they pay Facebook to put their ads on Instagram, on Facebook, because they know that everyone is addicted, right? Instagram and Facebook's purpose is all psychology. Their only goal is to get you guys as addicted to their apps as possible. So you keep scrolling and you keep looking at these ads, and the more looks at these ads that they get, the more money they make. So they make money off of selling your attention. You are the product within Facebook, and you guys know how addicted everyone is. So it's a pretty reliable product. At the time of me recording this video, Meta Platforms is trading at $197.65 a share, and that is $534 billion in market cap. Now that might seem like a lot, and it might seem like it's overvalued, and we're gonna get into why it's not. But in comparison, if you look at the 52-week range, at one point it was in the $340 range, and it was at a market capitalization of over $1 trillion. So it is very low compared to what it once was. So the first indicator of this stock growing that I'm going to look at is Yahoo Finance's 1-year target estimate, which is $301.79, meaning that if you bought right now, you're getting at least a 33% increase according to Yahoo Finance's estimations, which is very good. 1 year, 33%. You're not even getting that with real estate or the best assets out there, right? So obviously it's an estimation and it's not 100%, but the fact that Yahoo Finance is guessing that shows how undervalued this stock is. The next indicator we're going to be looking at is price to earnings ratio, better known as PE ratio. Now, I'm going to explain how PE ratio works, but what you should know is that the lower the better, right? So an example I'm going to give you guys is, let's say you have a $500 million company, right? And they earn $10 million every year, okay? So to determine the price to earnings ratio, you find 500 divided by 10, and that will give you the price to earnings ratio. 500 divided by 10 is 50, right? So it means it would technically, if all the earnings stayed the same, if the market value stayed the same, it would take 50 years for this company to reach its market value through earnings, right? So the lower the better, because if it took 1 year, that'd be awesome. Well, Facebook's or Meta Platforms PE ratio is 14.96, which is insane. That is insanely good. Like, for comparison, in my opinion, the best stock in the world right now is Apple. And if you look at their price to earnings ratio, it's actually higher. It's like 23, right? So you're looking at extremely undervalued. Any good stock analyzer will tell you that 14.96 is amazing. Warren Buffett will tell you that. In The Intelligent Investor, written by Benjamin Graham, he says anything under 25 is good. And that was written like 70, 80 years ago. So you can imagine that now under 25 is still amazing. So this PE ratio shows nothing but good signs to buy. Next, let's look at their income statement. So you can see right here, I'm just going to show you the income statement. Every year their revenue goes up. But what's important is that their cost of revenue is also going up, meaning their expenses are going up, blah, blah, blah. But the revenue is going up at a higher percentage, meaning that their profit is also going up every year. As you can see, 2017, 2018, 2019, every year the gross profit goes up, and that's what's important. So every year their profits up, up, up. Even in the trailing 12 months where it seems like everything's gone bad for Facebook and everyone's selling, they still made more than they did the previous year. So that just goes to show you that they're on track. They're still the juggernaut that they were last year, and you can trust this company. Trust me, it's a blue chip stock. It's one of the big tech stocks. It's out there, okay? It's up there. $96 billion in profit. That's a lot of money. Now, next, we're going to look at the balance sheet, and this is Facebook's strong suit. This is what they're amazing at. They have the best balance sheet in the world. Look at their assets, look at their liabilities. Their equity is unbelievable, like $124 billion. Come on, guys. That's insane, okay? Most companies never even smell that in their lives. So you got that in their company. Most companies even have more liabilities than they do assets. Their asset to liability ratio is something out of a museum. It's unbelievable. So this company will go through its downfall as they're trying to build a virtual reality world. They have the money to spend, okay? They're not reliant on anyone. They don't need to borrow a lot. You know what I mean? They're not reliant. So they're independent. They don't need to borrow money. It's a software company. So you can trust them with that. Lots of assets, little liabilities. Now you may be asking, how are they going to do with the high inflation that's happening right now? How are they going to be able when their cash is losing purchasing power? Well, they have so much cash and they don't need to continuously spend it. Compare Facebook with a rental car company, for example. A rental car company makes money off of their cars, right? They need more cars, so they can't just keep using the same cars for 20 years because cars depreciate. So they need to keep buying cars. They're reliant on cash. Facebook has the software. They don't need any physical maintenance to maintain Instagram. Like what? No. I mean, they might go with updates and whatnot, but they're not cash reliant. They make cash and they can save it really if they want to. So they have so much that you don't need to worry about inflation with them. And plus they can charge the advertising like Nike and Under Armour, they can charge them more money due to inflation. So they are kind of inflation proof, and I feel they are recession proof as well. So earlier I mentioned that they tanked in Q4 2021. Like in one day, Mark Zuckerberg lost like $30 billion. Like this man was crying, right? So why did that happen, right? So they came out with their earnings report and they spent a lot of money trying to get this virtual reality world out. 20 billion to be exact, and I will link the article where I found that information in the description. But $20 billion, and everyone's like, oh, this isn't good, that's a lot of money, they're gonna keep spending. Well, in Q1 2022, they realized they didn't really spend that much more, so people kind of gained faith back in Meta or Facebook again. And another thing that happened in Q4 2021 was that user growth declined. So there was less users on Facebook and Instagram, obviously due to another social media juggernaut, TikTok, exploding. So people were kind of iffy on that, but they returned to user growth back in Q1 2022. So Facebook is now back on track and nobody bought. Like it's still tanking. I don't know why, but you guys can take advantage. You're watching this video, you can take advantage and buy Meta, buy Facebook, because it will be high one day. 5-10 years, give it, you'll love it. Now there's also some news supporting this virtual reality world that they're trying to push out called the Metaverse. And the University of Maryland is actually encouraging and trying to start university courses and classes that are done on a virtual reality headset. It's crazy, I know. Even I don't fully agree with it, but it can't stop it. You can't control it, right? These people have way more power than you do. So try and make money off of it. Realize meta platforms is a thing. Take all bias, take all emotions out of stock investing. You can't. No one cares about your emotions, okay? So is it a possibility? Yes. Is it probably going to happen? Yes. They look at all the benefits, right? I mean, a bunch of people that live in like Canada, that go to school in Holland, you know, maybe they want to stay in Canada. They can go in class on a headset and it's like literally real life. It's like you're on campus and everything just on your headset. It's insane. It might take 5 years, it might take 10 years, but we're investing for the long run. And I'm assuming most of you are young people that have that time. So take advantage of the time that you have. Look at Meta as a great investment, because that's what I'm doing, and buy this stock. That's it for today. So that was all the information that I could give you guys. That was simple enough, I guess. There's a load more information about why you should buy Meta out there, but that was all I could give you for today. Buy it. Obviously, once again, this is not financial advice. I am not a financial advisor. I'm just telling you what I'm doing and what I think you should all be doing if you want to maximize profits. There's obviously risk involved. Everything involves risk. Even buying real estate is risky. So don't kill me if, you know, Meta goes to zero, even though it won't. So yeah, that's it for today. You know, I love you guys. Like I always say, I'm trying to make y'all some money. I'm trying to make y'all better. So listen to these videos with an open mind, okay? I love you guys. Peace.